I learned, and I think most advisors learned, that a well-diversified portfolio is everything I just mentioned earlier, right? A mix of different stocks and bonds, the whole adage, don't put all your eggs in one basket. But for some clients, that's not enough because diversification against all of those different stocks and all those different bonds, we still invested in a very similar type of asset class that's correlated to the stock market, right? All stocks, regardless of the style or how large they are, they're traded on an exchange, at least most of them are, and their value changes daily, sometimes second by second, right? So there's could be a lot of volatility with that. And so some clients really look at something called alternative investments. And so alternative investments are types of investments that are uncorrelated to the stock market and the bond market. So these could be things like owning real estate outside of your portfolio. One of the reasons why people even look at diversification to begin with is to try to lower risk, right? Everybody wants to live in a world where we can achieve the highest returns with the least risk possible. And so that's the premise of diversifying a portfolio. If we weren't concerned with risk, we put all our money on Nvidia or the S&P 500, for example. Don't do that. That's not my advice. We're not recommending that. But the diversification is to achieve something goes into what's called the efficient frontier. It's a little bit more analytical here. I'm not going to go too deep into this, but what the efficient frontier says is it allows us to be able to build a portfolio that considers both the risk of the investment and the return. So we can plot different investments on this graph, if you will. And by using alternative investments, we can drastically reduce the volatility because they're not going in the same direction as stocks are with the stock market. If the stock market crashes, for example, that doesn't necessarily mean that the real estate market is crashing. That doesn't necessarily mean that oil and gas is crashing or all these other different types of industries. And so meaningful diversification to me is going outside of the traditional world of stocks and bonds and really looking at alternative investments, real estate, various other instruments that can more meaningfully diversify the portfolio.
Thank you for joining us today for another episode of Absolute Trust Talk Live. If you enjoyed listening in, then don't forget to subscribe. You can find us on Apple Podcasts or wherever you may listen by searching Absolute Trust Talk. While you're there, we would also love for you to leave us a review. And then why not share your favorite episodes with family, friends, or colleagues too? You can find all of our shows and corresponding show notes by visiting absolutetrustcounsel.com. You'll also find a variety of other free resources, including our ebooks, videos, blogs, presentations, and more. If you need help with your estate planning or administration, we also offer a free discovery call to help get the process started. You can find more information on booking your session by visiting absolutetrustcounsel.com/scheduling. Don't forget to keep an eye out for our next live episode. If you join us for the broadcast, you can submit questions during the show. But if not, don't worry. You can always get in touch with us by sending a quick message to info@absolutetrustcounsel.com. Thanks again for listening. We'll see you soon.